Good afternoon, everyone. You're all very welcome to today's weekly market open for today, the Wednesday, the 22nd of October. So firstly, let us apologize for some technical issues we had last night on our webinar. Unfortunately, we had some streaming issues, and of course, the reconciled stream, of course, wasn't visible on our platforms. However, as we move into price action today, of course, we'll do a comprehensive kind of run through of all of the major themes and assets. And really, kind of the first place we're going to start this week is the really subsequent bounce back from last Friday into the beginning of this week. Now, we have seen markets overall, global shares, equities, stock markets, Monday, Tuesday, actually being quite consolidated following that bounce back on Friday. And of course, we've seen kind of a similar rally in some of the other assets like the dollar, where we've actually seen a little bit of a retracement in the safe haven narrative. So as we move into Wednesday's open, overall, the global shares, as I said, the S&P, the NASDAQ, the Dow Jones is quite consolidated as we move into session open today, of course, following that kind of 2-3 day consolidation period. Of course, we mentioned the dollar a moment ago. We've seen that very, very strong progressive move higher off of that 99.98 level on Friday morning, and since then markets hasn't really looked back. We've gone back into that prior range from where we traded at, and back above that 99 benchmark. Now, last week we talked about this idea of creating a short-term correctional play, but really ultimately looking to see this price structure progress higher. Now, last night, interestingly enough, we had that break above that 98.80, 98.70 handle, which was really this kind of subsequent kind of benchmark low that we were trading at last week. Of course, we broke down, we got it back above it, we retested, we held above it, and as I said, into today's trading session, we've actually seen dollar prices progress above that 99 handle. So short-term perspective, dollar buyers have been in. It's definitely been noted in the FX markets. We've seen that euro dollar slide from that 116.50, more prevalently that 117.20, 30 handle, which created that apex highs on Friday. And of course, cable, very, very strong reaction from that 134.50 handle on Friday, creating that influx, breakdown, pull back to value area, and then really since Monday we've seen cable prices move and drift lower. Now, that of certain has really been emphasized by the inflation data that came out today. And of course, if we look at the calendar very, very briefly, we can see that the headline on the core inflation data prints today all come in lower than expected. So 3.5 as opposed to 3.7 on the core, 3.8 as opposed to 4 on the headline, and month-to-month inflation at 0%. Also, the retail sales, or retail price index, should I say, also coming in lower, as too is the producer price index. So all of these things will open up the mandate for the Bank of England to potentially start looking for changes in its policy outlook and recommencing interest rate cuts. Now, we did mention that as well. And of course, looking at the narrative of obviously UK inflation and so on and so forth, and obviously seeing that come back today really opens up the Bank of England for potential cuts in the short term. So it'll be interesting to see if that comes to fruition, particularly if this inflation narrative continues to develop into the end of the year. Now, on the inverse of that, we've obviously seen that pound get smashed today from under 134 down to those 133s, but alternatively, we've also seen a massive influx in vol and increase in price structure in the FTSE. So naturally, the UK 100 FTSE index has seen massive surge in the upside. Pretty much a straight hedge. Obviously, weaker pound. And of course, we've obviously seen the FTSE move higher in that regard. So the UK inflation data was quite important today because it's allowed that kind of short-term relief rally in the FTSE. And obviously that correctional play, of course, in the pound as well, moving lower against what we've seen, a stronger dollar. So FX flows is pretty clear. Directional bias off of the news today has been pretty clear. Now, unfortunately, when it comes to the calendar for the rest of the week, with the exception of Friday, and obviously global structural PMIs and S&P data, which of course we'll focus on more tomorrow and into Friday. Calendar is pretty light, of course, with the continued lockdown in the UK, and it's something obviously I touched upon today in our daily note. It's really going to be important to see kind of what sort of knock-on effect does that have. So really watching markets for resumption or any sort of surprises in the midst of what we're starting to see now in terms of earnings season. So Q2, We talked about it obviously more recently over the last week or so. Earnings season is going to start to report. We've seen some of the banks report last week. We're going to get a lot more companies like 3M reporting this week, Honeywell reporting this week, Southwest Airlines reporting this week. But we're going to get continued flow of economic data from the stocks individually, earnings, and of course revenue over the next kind of 4 to 6 weeks. And that's really going to pave the way to see whether we get a repeat of what we saw in Q2, where 78% of all of the major stocks in the US all beat earnings expectation. And of course, into H1 Q2 reporting, we actually saw that the average cycle for the first half of the year was around about 5.1% EPS, which is basically earnings. And of course, interesting to see if that materializes into a repeat into H2, Q3 and Q4 combined, to kind of create that idea of 8 to 10% return on EPS, which of course would be a fairly strong, healthy beat from a corporate perspective. So that's obviously going to be very, very important as we move into, obviously, as I said, towards the end of the year. Now, back kind of touching upon a few more things of relevance importance. Obviously, with the dollar creating that kind of apex recovery, the equity markets moving more into risk on really since Friday, we have seen a fairly tumultuous move lower in gold markets, in the crypto markets today and obviously yesterday. Now, gold incredibly 6% off in a day. It's down about another 1.5% today from market reopen. So when you look at future-based perspective and future-based pricings, we can see here that gold is down around 0.7% on futures. So again, when you have such a blistering rally like what we've seen in gold over the last kind of 8 to 10 weeks, this massive continuous grind higher from, as I said, 3,200, 3,300 up into kind of 4,400, 4,500, 4,400 or in change range, it's naturally there's going to be knee-jerk reactions. There's going to be kind of sharp corrections. So at this moment in time, gold is created, even if I just remove these blue bars for a moment, gold is creating repetitive short-term lower lows, lower highs into that correctional trend. So it'll be interesting to see kind of where is the line in the sand for correctional play. Given, of course, the mandate that we've seen, ads on social media, ads on YouTube has really emphasized over the last month or so in terms of the desire to buy gold. But it certainly seems to be, at least in the short term, exit liquidity, because already we are seeing gold prices down nearly 10% from the beginning of the week highs. And if you go from peak to trough with wicks, you're down about 8.5, which is still a fairly considerable retracement in such a short period of time. So gold markets incredibly volatile at the moment. And it's obviously something to look out for, particularly, as I said, given how expansive and how aggressive this gold rally has been over the last 3 months or so in particular. And it really wouldn't be surprising if we were to get gold pricing back into that kind of 3.7, 3.8, 3.9 threshold before we actually start to see a little bit of bottom, just to kind of counteract. And you actually have to remember that trading last week, gold was up over 60% year to date. For assets to trade up 60% year to date without any sort of consolidation, without any sort of material retracement as such, is quite unusual. So I wonder, is this the start or development of a 10, 20, 25% correctional play in the short term against what's been a very, very blistering trend over the last, as I said, 3 to 6 months or so. The other narrative that I want to look at is oil prices. Oil has obviously been aggressively moving lower over the last week or two in particular. Initial breakdown on the 10th of October, and since then it's just kind of migrating to the downside. We saw lows last Tuesday, we saw lows into Thursday, and then we actually saw weekly lows kind of cement around that 56 handle. Since then, we've actually seen a little bit of a bite back. Oil is up around 1.5-2%. Again, more driven off of supply risk talk and narrative, and of course comments regarding US, India and China trade alliances and developments is obviously something to look out for as well. Now, obviously we've looked at oil more recently because, of course, weaker oil prices generally means weaker growth, but it also means weaker inflation, and of course that's something that the Fed mandate is going to be watching closely. So into Christmas, it'll be very, very interesting to see whether we see further declines, but ultimately whether we see US oil West Texas Instrument really try and break through that 56 handle. It's been fairly steepening to the downside. It's dropped from 66 at the end of September to 56 over the last week or so. probably going to get a short-term rally back up into 60, but really looking to see if there's an inflection point for further downside progression, or whether this is a material short-term bottom for price action to mean revert and really kind of move back into that average, back above 60, into 62s, into 63s, and really back into that prior range that we broke from. So that's going to be worth watching out for over the next week or so as well, in the backdrop of obviously Fed meeting next week, US government shutdown, which of course we're looking and hoping to see an end to over the next week or two, and really looking to see if there's any sort of offsetting kind of narrative in relation to that as well. So overall, markets still very, very interesting, and something we haven't actually focused on yet, which I'm going to look at now, is the VIX curve, right? So we've talked about the VIX curve and how so important this has been this year as a move and as a correlation tool for short-term session-to-session sentiment. We've really seen it kind of unravel from that spike higher on Friday into Monday of this week, off that 29 handle and trading back into those mid-teens, 18s, with a short-term bounce into today's open. Now again, dead cat bounce would suggest we're probably going to get a short-term move into the VIX between kind of 18.5 and 19. That's probably where I'd expect the VIX to move short-term today. If that is to happen, does that put in some short-term pressure in the likes of the S&P, in the likes of the NAS? Well, we know the S&P and the NAS has been very range-driven over the last couple of sessions because, of course, that counteraction and that V-shaped bottom that we saw on Friday moving back into those all-time highs. So really, for me, this area here in yellow between kind of 67.30, 67.50 is worth noting. If we start to falter here, you're probably looking at price structure breaking down really back into that 6700 handle, which will be short-term narrative to see if that VIX does get a little bit of a bounce back into that 19 print. Now, if that fails to materialize, you're really looking at the S&Ps to consolidate in this region, the NASDAQ to do likely, or to do kind of the same scenario. But as I said, do not be surprised if we get a little bit of a correction move against this phase impulse and obviously this secondary impulse here, which we got to all-time highs Friday into Monday. So really wouldn't be surprising if we got a short-term break, price action got a correction, and all of this value area that we saw at the beginning of the month, Thursday, Friday 2nd and the 3rd, Monday the 6th, Tuesday the 7th, Wednesday the 8th, wouldn't be surprised if we actually got a little bit of a knee-jerk reaction back down. But obviously let's see how that plays out over the course of the first 30 minutes or so into the open, and really wanting to see, does this kind of sell-off that we've seen this morning, does that materialize? Does that develop into a little bit more of a deeper retrace? Because at this moment in time, we're literally holding the value area from today and yesterday on the NASDAQ. Similar type of scenario in the S&P. Yes, we have opened slightly lower, but again, holding this range area. So looking to see whether this gets taken out, gets broken through, and as I said, if it does, you're really looking at price structure moving back into that 6680, 6700 handle, which is about 40 to 60 points off kind of where we're currently trading at on the S&P. So fairly clear logic, fairly clear bias, using the VIX tool for correlation in terms of upside vol. As I said, upside vol meaning a slight pivot to risk averse, risk off, which means selling on risk denominated assets like the S&P, like the NAS, and like the Dow. Now, the Dow is also quite interesting because, of course, the Dow did get to new all-time highs on Monday into Tuesday, and of course continue to aggressively move up really into Tuesday evening, where we did just under nab the 47,200, which for me is just kind of above all-time highs. Now, of course, it failed. Price action is still mean reverted, and as I said, really wouldn't be surprised, again, similar type of scenario, if we saw a correctional movement. It has already started to break down, which for me, that idea of seeing the S&Ps, the NAS, the Dow become corrective and moving back to some of these value areas that we've talked about here really wouldn't be surprising. So 46.9, really there's appetite there to potentially move another couple of 100 points lower into the session, and really worth keeping an eye on that one. And then, of course, in the DAX in Europe, as we said about the FTSE, DAX got back. We talked about it last week, really last Tuesday. This breakdown, this reaction, move off of the value area just shy of 34,400. We talked about that. We marked it out last Tuesday, and it really completed that move, breaking down, getting back into that 23,750 handle, forming that V-shaped bottom and moving back into that value area. Now, incidentally, as we move into this week, it's no surprise that last Monday's value area held firm on Tuesday. It held firm on Tuesday yesterday and is also held firm as tops today. So for me, unless that DAX breaks above 24,400, 450 area. You're really looking for that to happen to see DAX ultimately continue on this corrective upside path back into that 34.6, 34.7. But for me at the minute, it's very corrective, it's very consolidatory in this region. And as I said, if you look at price structure, it's really kind of migrating back and forth between the 24 lows, the 24.4 highs, and this midpoint level that we've drawn here in black at 24.2. And it certainly looks like, at least in the short term, the DAX is going to move back into this 24.2, 24.1 handle. Particularly, as I said, if the VIX volatility curve runs higher, which it's opened higher today, it's actually at 19 as we speak. So you can see that gap up in the VIX curve. And of course, as I said, looking to see this become more corrective in the likes of the S&P and the likes of the NASDAQ. So for me today, markets are tepid, they're tentative, the risk of obviously very, very bullish over the last kind of 4 days or so, particularly from the Friday lows into yesterday and today's consolidation. So it'll be interesting to see if there is a little bit of a bite back, if there is a little bit of a knee-jerk reaction back to the downside, just to kind of even out the order flow and the volume for what's been a fairly, very strong week, trading from last Wednesday, last Thursday, into obviously where we're trading at today currently. Now, finally, the note of Bitcoin. Bitcoin obviously got a lovely V-shaped reaction on Friday as well. It got a secondary extension to 114 yesterday, but that has pretty much given all its gains back between yesterday evening and really Asia trading overnight back into that 107, 108 handle. Now, we had seen a vicious wick earlier, but it's maintaining price structure around that 108 handle. So it'll be very interesting to see whether it takes out those value lows sub 107.5. If it does, the likelihood is it probably comes for the wick and probably tries to potentially retest those bottoms around that 105.5, 106 handle into the better part of this week. So interesting to see how that develops through the course of today and more likely into tomorrow, broadly beyond that. Ethereum, very, very similar play. Weekly structure, very, very corrective. It's a little bit less volatile compared to BTC. Obviously formed bottoms on Friday. Got a little bit of a knee-jerk reaction of 4.1. It's trading back at 38.50 today, just slightly under 38.50. Still holding structural lows. So for me, not really a massive worry there on that one, unless we start to see a significant pivot into risk aversion, which you'd ultimately expect the VIX to go beyond that 19, beyond that 19.2, and price action structure to really go beyond that to create a more meaningful, deeper sell-off. But VIX today has opened up higher, which for me is quite interesting. 4-hour structure, you can see the gap yourself there. Really interesting to see whether that becomes more entrenched, that sell-off becomes more entrenched. What could actually happen is the VIX could actually hold this area here, not actually progress further, consolidate within that 18.5 to 19 threshold, and actually ultimately close the gap on the downside. And if that does happen, where price structure actually goes back down, given the corrective open on the upside, well then what you'd actually like to see happen, what you'd expect to see happen, is S&P's sell-offs not to materialize, the NASDAQ sell-off not to sustain and not to continue moving lower, same again on the Dow, and that market to actually move back into the range. That's why that first 30 minutes for me on the VIX curve is really, really important to see whether this open upside volatility actually continues and entrenches and sustains through the course of the session, or if it's a pop on the open for markets to actually run lower. And if that does actually happen, well then the likely opposite is S&P's doesn't break through, goes back into the range, and the NASDAQ ultimately follows suit with the Dow in hand. So just keep an eye on that. First 30 minutes I think is pivotal. We've kind of looking at it on a cross asset basis, and of course looking at the volatility in the back end and the dollar play as well. Obviously spiking higher yesterday, it's got above the 99s, it's pulling back into retest. For me, obviously short-term perspective, really looking to see if there's a second bite back in the dollar here around that 98.80 to 98.90 handle down here as such. So do keep an eye on that one as well. And then, of course, as we move into just the broader futures pricing, you can see it yourself before we round out today's call. Gold off 1%, Bitcoin off 3%, equities fairly tentative, all trading slightly lower on the futures markets. And of course, on the upside, the big winners today being WTI, oil. We talked about the VIX gapping higher on the open, and some of those soft commodities as well also being reconciled slightly more to the upside. So do keep an eye on that into today's session. We did a fairly comprehensive daily note today in terms of the economic developments, really looking to see, as I said, more updates on the shutdown the geopolitical trade side, really looking for more on that. And then, of course, looking ahead then, really on terms of the calendar, a lot less this week, with obviously the Fed coming back into play next week. And of course, next week we've got Bank of Canada, we've got the Fed, we've got the BOJ, we've got a multitude of central bank meetings next week to obviously go through as well. All right, so guys, that's where I'm going to leave it for today. Price structure holding up. VIX hasn't extended above that 19 handle. In fact, probably is going to try and probably come for this gap fill. If that's the case, S&P's, NAS, no sell-offs there. Sustaining into 3 o'clock. Dow did initially break down. Likelihood is, could Dow return back into the value area? It's about 70, 80 points below the value area. Could potentially come back up as well. So if you're looking for selling opportunities maybe later in the session, with that VIX curve running lower, that is probably the type of play you'd look for, right? So if you're looking for that VIX to fill the gap and then maybe pick up again, that's the type of move you'd look for. Of which case then the Dow is probably your best bet. Breakdown, move back to value area, look to see if there's a reaction and a secondary follow through maybe through the course of the afternoon. But as I said, them value areas today are proving to be very, very interesting as we move through the better part of today's or this week's trading week. All right, guys, I'm going to leave it there. I will be back tomorrow. As I said, as always, trade safe. Markets very, very volatile at the minute, particularly the likes of gold. Oil markets very, very volatile. Equity markets seeing knee-jerk reactions from Friday, so just be mindful of that when you're allocating your risk into the trading plan as well. All right, have a great week, everyone. See you all tomorrow.